It's this one where you broke down the Bitcoin trade.
Yeah. So um, I'll tell you guys just one particular setup you should wait for. Okay, just one particular setup you should wait for, and don't do anything apart from that. Okay, you might wait for 2 3 weeks, but once it starts moving, it moves for a very long time. Okay, so Krish was in one of my classes and he can attest to it. This has been what I've been hiding from, the world, but I'll be sharing with you. So let's go straight. I don't know if there's anybody other person online, but I'm good, bro. How you doing? Yeah, this is 9:45 in the morning. Yeah. Let me just
Morning.
yeah, just um let me just say the reason why we buying, all right? You see? Yeah. The reason for the buys and the execution.
Can you after that overview or before that tell me how can I read the candles like that? I mean, uh, that one guy showed it, but I didn't understand it. I think his name was something with A. Uh, just Abrazolo, something like that.
Yeah. So he said what did he say?
How can I read the price with CRT? Because he showed that thing with CRT. Just a second, I will try to find it. This one. I'm replaying to it.
Huh? Okay, so I will show you guys how to do it. Okay, you read it with CRT. So you guys might only want to trade only CRT. All right. So these are you read it with CRT. I also teach you that you can read it with CRT. You can read it with um
Hey,
normal markets, but everything in the market is with CRT. So the
hey,
best reading
Robin.
is with CRT.
Robin, can you mute yourself, bro?
Yeah.
Yeah.
Okay. So yeah, let's go. Let me just share my screen right now. Can you see my screen, guys?
Yeah, bro. Yeah, we see.
Okay. So going straight to trading. All right, you guys, this is it. All right. So you can see this was my analysis I was checking. All right. This was my analysis I was checking. So so let's now yesterday. All right. I gave an explanation yesterday, which was yeah, actually is invalid. So you don't look at it. Just the only thing I taught you guys the first class for this week that was it on Monday. So I do anything. So that video, I will advise you to rewatch it, get something from it. So you only want to check from the weekly, the monthly, simple. Then the daily for continuation. Listen to me, guys. You only want to start trading with the weekly and the monthly, but for continuation, you use the daily. All right. You don't use more than that. So the four time frame we use is the 4 hour, the daily, the weekly, and the monthly. All right. So let me clear this. So this is it. The chart is clean now. So from the okay, first of all, from the monthly, all right, from the monthly, look, you guys, from the monthly, I'll give this explanation from here. Now, the weeks below, the explanation I gave the other lesson was from here, right? It was this CRT, right? Yeah, it was this CRT. So this was the first, so the candle that swept. So for the monthly, you use that. Then the third candle is your entry candle. That's where you start looking for trades from, right? This third candle, right? Yeah. And this also. The inside of this candle, you want to start looking for trades from there. So this is the opening price of this candle. This one, opening price. So it's here. So it's like the opening price. So let me just it's there already. Now you go straight to the 4 hour or the weekly to check for key level. Since you are using the monthly, so use the weekly or the daily for key level. All right, so you can take the third entry, and this is it. Weekly, first of all. What do you say? Yeah, I do use the 4 hour so I can be able to take from the peep from the very beginning, okay, from this point. All right. So once we swept into this candle, okay, we swept into this candle. Now this is like the weekly, but let's just see. Okay, preferably, all right, preferably you use the daily for the monthly, then use the 4 hour for the weekly, okay, preferably. But you can be flexible with it. So this was like the first candle around here. All right, let me draw something else. This point was the first candle. This point was the first candle. This point is the second candle, and this is the third one around here, right? So this is it. Now we opened. Can you see my screen, guys? Okay. So are you recording? All right, all right, all right, all right. Good, good. After the class, you send it. So this is the opening of the second candle, right? You can see my cross chair. So this is the opening. This point, right? So we opened and dropped a little. Now price went up and closed above it, which supposed to be upper price, but because we didn't wick below, like what I taught you guys, all right? Because we didn't wick below it before closing above, that's what makes it invalid. Okay, this makes it invalid. All right, so start doing the analysis from here. So this is the candle, right? So closed above, we are waiting for price to close below it, but right here, right, we came back and closed below, right? We wicked it. This is like reading the chart on the 4 hour. I read it so clearly on the 4 hour. It was clean on the 4 hour. Okay, so this is like the manipulation candle. So we wicked it around here, then we closed above it here. All right. So whatever you're looking for is from the third candle for a bullish um, trend. Okay, whatsoever you're looking for. Now this low becomes this low at this point becomes a safe low. Okay. Now you can see how many days it took this to happen. It took it a month. You know, imagine you are framing a whole trade for a month, and for you to take a trade from there and boom, look at how long you would have hold. Can you see that? You are holding for almost half of a year. You can see that. So patience is just you know, patience is everything. All right. So this is the view on the daily. All right. So this is where you want to take your trade from this point, from this point, and from this point. So inside of this point, you want to start looking for trades from there. Okay. So that's just it. So price came back into it, and this is like uh, a okay. This is like a key level, right? This point and a key level, right? So this is where you take trade from. This other block, model one. So this is like the model one entry, right? Sorry, sorry. So this is like the model one entry. Then stop loss below, right? That's your stop loss, right? So you pick a trade from there and boom, because this was like the opening price of the next month. This is you can see that, right? January. This is the whole January. So as soon as February opened, right? This February opening opened into key level, then bounce out from there. You can see open, low, high. You can see that. Yeah. So first candle, second candle, third candle. So first candle accumulates, second candle manipulates, and third candle distributes immediately. The first day of uh, of February, we started buying. So we would have taken a trade from this point of this place. We will have taken a trade from there if we analyze from the weekly, from the daily. I mean, from the 4 hour. Okay. So this is how you would have do it. Let me remove all these write-ups. Remove it. So, so let me go to the back. All right. So on the 4 hour, right? This is where you start. This is like a glitch. So look. All right. So on the 4 hour, this was the opening price. So you want to start. You want to start checking from the opening price. Okay. All right. Let me accept. I can't see anybody. SRB. Issue. I don't know. You should join again. I will tell me quick so I can accept. Okay. So all right. So this is the 4 hour. Okay. Now this I will have start reading the price because this is the opening of the candle. So now this is the opening of the candle from here, right? Now You guys unmute yourself so I can know you are with me. So this is the opening. Okay, we've been dropping from here. Okay, we've been selling from this point. Right, what has price been doing? So, okay. So we've been dropping from here, this point. So this is like a sell. Look at from this swing guy. All right, you read from this swing guy. Now you see from this swing guy, we weak above, right? But let me use this. Is the high one. We weak above this candle. Weak above, right? This is a classic changes of the weak above, close below. All right. So it means we are bearish. So the next candle you use. Okay, I always like starting this with another color. Let me start with the red. So the black will be for then the green will be for week below. So this week above, close below, lower prices, key level around turtle soup around here. Look at it, right? And that's like the turtle soup for a sell. So this is the candle we are interested in, the candle that's close below. So we draw the low. Now, no matter what is inside here, you don't have any business with it until you can see we weak below. All right, weak below. What were you expecting? Close above. So we change from bearish to bullish. All right, close above. But after all this move, you are still on your sell. Okay, you are still on a sell from here. Now this is like an entry. This is like giving you an entry. All right. So either way you make money. So once price sweep weak a high and close below it with a T candle, you want to see price come back into that same range, the way I showed you from the daily, that you would have taken a trade from this point, right? So on the daily, the same thing on the lower time frame. So price coming back into this area is your entry point. Okay, so we didn't get to the body. So this is like a other block, this candle. Inside of it, you take a trade. This is your stop loss. This high, okay? This high is your stop loss. All right, so price came back into it. You take your trade from around here, stop loss above this place. Okay, then boom, you can see the drop, a very long drop. All right, you will have taken more entries. So once price start closing below, you are looking for more entries. Okay, close below, you are looking for more entries until we close. You are like following. So your entry point is from here, from this point, right? Then this is the candle we are interested in. So this is the candle. This one swept the candle. So that's close below, right? Close below. This candle close below. So this particular candle that close below, inside of it, you want to look for trade, right? Inside. So inside of it, this is fair value gap, turtle soup inside of it, right? So you take a sell from there. Another one. This is the candle. So we close below it again, right? Sorry. So we close below it again, which means lower prices. All right. So on the lower time frame, this open high, maybe it's into a key level or something, and start selling. If you don't see anything there, okay, don't do anything, don't take another trade, just allow it to play out. All right. So at this point, all right, at this point, within week below, right, we close inside of it. Okay, within week above, within week below. So this is like a consolidation range. So I advise you to close at this point. Even though price start coming down, you don't have any business with it. I advise you to close at this point. Now, this is how I like to frame my trades. So after when price refuse to wick below or close below for a lower price, I'm really confused here. I don't know what price is doing. So I will take partials of all my entries. Okay, all my entries, I will take partials. Then you close above it at this high, right? Which is like a change in direction, but this is a counter trend directional change. Okay, this is a counter trend directional change because we didn't wick below. All right, there was no wick below, but maybe SMT, something like that. I don't know, but let's check. Okay, there is nothing like SMT. Okay, let's check DXY. So on DXY, there is yeah, look on DXY, there is SMT. Okay, so we swept this high, right? Close above this high, and also close below it around here. So as long as the high is taken or the low is taken, okay. So, but it's not a high probable one because you might even decide not to check for SMT. You might decide to only check for SMT if this happens. This one, this particular kind of change the state of the building. All right, so use that as SMT. Let's check if there's an SMT around there to confirm the sell. Give it a full confirmation. Okay, look, this is an SMT. So we swept that high. Failure swing on DXY. Real Totusuk on Euro USD. So this sell was good. Your stop loss is still here. Don't forget, still your stop loss. So that's your stop loss. We closed above it. The counter trend closed above upper price, right? So now this is another phase where you get confused again. Or I won't call it confusion. I will say this is another phase where you take partial again from maybe this is your first entry, take another partial, or look, you take a trade from here, right? From this point, you don't need any other thing. All right, you don't need any other thing. Just take only this trade and hold to the next maybe the next 3 weeks to reward. This actually gave a full 3 weeks to reward. Let me calculate it out. Don't be greedy. So don't think you won't lose. You will always lose, but not to lose every time. Okay. So this is one. So let's check for completely gave a 3 weeks to reward trade. There is look, this was the high. It gave a 3.8, right? Weeks to reward. Now this you took this sell because you were waiting for something. Okay, you took this sell because you were waiting for something. All right, so don't think. I can still go to the higher time frame and we will still check how we would have taken the sell. You can still go to the higher time frame, but this is like far. I can't go more than this. So you can go to the lower. You can go to your lower time frame and look for this same setup around this area, this upside around this area. You will see the same wick above, close below, so that you can be able to position yourself in this in the week. All right, so you have a very tight stop loss, and you can see turtle soup SMT, according to Romeo. All right, so that's it. That's one for the first sale. And now secondly, this is where you start analyzing. All right, so we've been bearish because we didn't wick below this low, but we only closed above it. All right, so we are still interested in this candle, this particular candle. We are still interested in this candle. We are not interested in all this move because this move will surely fail. You can see it went up for a little while and failed, right? It went up for a little while and failed, but it will surely fail within week below. So this was not, this was a false change in state of delivery. There's no change in state of delivery here. It's just like a counter trend, just like some move, all right, some unplanned move from here. Then you can see for those people that took a buy from here, it came back into their stop loss, right? But because of this one was correct, right, we had a week above, close below, price didn't come back to the stop loss area. You can see. So we came back and finally closed below it, right, with this candle. We finally closed below with this candle. Let me on the so finally we closed below. All right.
Okay, so in this case,
Yeah.
the last candle is again not swept.
Yes, this last candle was not swept, right?
Yes.
All right. This is it. Now, what did you see on the daily? What did you see on the daily?
Yeah, exactly.
Yeah, you can see that on the daily, right? Yeah. That's very good. So now, that's why I say you have to be flexible. Since you are working with the monthly, you have to be flexible. Okay, flexibility is the key, right? So the same thing within week below here, we just close above, but now we wicked it, right? We close above. So if you are working with the monthly, I will advise you to use the weekly. I will advise you to use the daily. If you are working with the weekly, I will advise you to use the 4 hour, like I said earlier. So to clear your doubt, let's go to the weekly. Flexibility is just, it's the only thing you need, right? You have to know how to work with the time frames. That's why it's there. You don't just rely on one time frame. Even Romeo doesn't work with only one time frame. You work with all the time frames, okay? And you don't frustrate, okay? Now look at this on the weekly, right? On the weekly, we close below here on the weekly, all right? We close below image lower prices. We came down and wick this candle, right? Came down and we wick this candle, right? So what do you want to look for on the 4 hour? Because this is like a key level, okay? Okay. Now we didn't know there was a key level here. We want to align this with a key level. Do you understand? This is a key level on the, okay, from the monthly. We have another block from the monthly, right? So we have another block on the monthly. So, okay, I need to get my magnet on. And, so that's like a key level. You don't just work with it blindly. So this is like a key level. Price dived in into that key level with the weekly also. So this is where you want to start seeing 4 hour closing above. Okay, so we wicked this candle, we came back and we wicked this one again because of the strong order block that we have there. So let me remove this. This is where you have interest in. This is your area of interest. Okay, you understand? This is your area of what? Interest. Now for this sell also, it's also from the weekly, right? This sell, you can see. I didn't check this earlier, but as long as your analysis is right, it's always there. This is a fair value gap, right? That's a fair value gap there at key level. Okay, so you want to see that price sweeping a candle into a key level. All right, that's what you just want to see. Okay, so because the candle is not a pattern, It's a logic. It's logical. So you don't just want to trade it blindly because it has a very high win rate or a very high impulsive move after the stock. So don't trade it like a pattern. Trade it with logic. Trade it with time frame around it. Trade it with good order flow reading, which is exactly what I'm teaching you guys right now. So this sale was like a kiss of death. Yeah, a kiss of death because this is December. Yeah, so sale January opened from here. This is December. January opened, came down. The next week, sweep this low into this key level. Okay, so straight to the 4 hour. These are you will position yourself in the peak of the candle and hold it to anywhere you want to hold it to. So these are you have taken it from the very beginning of the candle. Okay, so and you can see the right. We wicked this candle, got wicked here. So this was the candle that's supposed to take a buy from you're supposed to take a buy from here because wicked is we are supposed to close above this candle. But because this other one came and closed below into a key level, so we wick this close above. So I couldn't see SMT from this the other day. I don't know why. But let me check if it's a broker I used. So there was no SMT also. So you use the dividend to keep it clearer. You use the daily for the monthly. So daily weeks but 4 hour didn't. All right. So you wait for price to close above this daily. You wait it, then you close above it here. It makes this low stronger. That's why I always say you guys should always wait. All right. Now this is a strong low. And this is the reason why you should always wait. Okay. So if the 4 hour is not clear, check the daily. If you are working from the weekly, if the 4 hour is not still clear, check the daily. So this 4 time frame works like hand to hand with each other. It's something you can't separate them. You can't separate it. You must work with it. Okay. Don't separate it. Don't say because somebody said the time frame alignment. Now you now want to start focusing on one. You focus on one time frame, you will miss a lot of entries. Had it been you focus on only 4 hour, you will have missed this buy, right? You'll have missed this whole move because it doesn't give you what you wanted. GU. Okay, SMP was with GU. Okay, let's check. Let me check. At that same 4 hour key level, that same 4 hour points. Let's check. So if these are like another reason. Okay, so if you check, okay, this is swept. Good. Okay, let's check for 4 hour. This is another stock. So we only use 2 pair for this Euro USD, right? We only use 2 pair to analyze Euro USD, which is the DXY and the GU, right? So make sure you always check both so you stay out of confusion. So I'm not sure we are the same thing. Okay. Okay. Okay, yeah. You can see we on the DXY there was a sweep low, right? Can you guys see it? All right, so on the EU there was nothing. So this is like they are trying to like lure you out of this so you don't take the trade. Yeah, that's what they are trying to do. So they are trying to like lure you out of it. So but because you checked for SMT, you are on point. So SMT with it. and we close above it. So what do we start? So what do we want to start looking for now is uh, a bullish move. If price come back into this range, good for us. Okay, into this area, good for us. So now we came back into it, right? And we had a other block that made this other block strong. A fair value gap, I mean, around this point. This fair value gap here that made this strong. So price tapped into it. This low is your stop loss, protected low. All right, tapped into it and boom, started going to the upside. You can see, right? So imagine you take a trade from here and okay, let me and this was during the third candle, right, this was during the third candle. Yeah, this was February. All these are January, so this is February. So this was during the third candle. So imagine you take a trade from that point, that same point. Let me just draw out. Let's see how many weeks to reward. So let me say you reach 1,000. Okay, you reach $1,000 from this point. Sorry. Okay. This is the stop loss point. So let me say you reach $1,000. Maybe you are still holding to this price leg. So you reach 1,000. This is how many weeks to reward? 24, right? 24 weeks to reward. So this will have been a 24K account, a 24K for the first entry, 27K, sorry, 27K for the first entry. Okay, then you have more entries too, right? Like this one. So like this one, another entry, the same logic, right? This is another entry, right? You take the trade and move. So, around here is another entry. Around this point is a weekly trade. Around this point is the weekly. So let's go to the weekly. Around this point is the weekly trade. Since we are coming from the monthly, so we use weekly for continuation. If we are coming from the weekly, we use the daily for continuation. All right, to have a clearer view of the market. So you can see it, right? I told you this was from the weekly. Now we swept below this candle, close above it. This particular candle was wicked. Now this also got wicked. Okay, this one. But let's see why price refused to buy from it. There's no, it's just a big fair value gap. Okay, but for this one, there is another thing from here, which is this inversion, which was like a very strong drawn liquidity that drags price downward more, then from there bounce. You see that, right? So how would you have taken this trade? So after taking this first one from that point, how would you have taken this one? Since it's a weekly continuation trade, and let's check on monthly. If monthly closed above, so we closed above here. Let's see here, we closed above this candle, right? So uh, the next candle, which is this, should be your entry. You look for another trade. So let me put a vertical line on this. This is on the weekly. So this was it. All right. On the weekly also, we are closing above, right? So close above here, close above this candle, close above, close above. Because we close above it, we didn't week below it, so we close above it here again, which is that we are still bullish. Okay, so this is how to read the close above, close below. So once we close above it here, we start looking for buys. So price came back and weaken this high means you just like to see something to push it down into this fair value gap and this inversion for a buy. So how would you have taken this inversion? Let me remove all these drawings. It's looking complicated now. How would you have taken this buy? So at this point, that's where we dive into the inversion. So the 4 hour. Let me put a line on it so to be clear. Put this line. This one. This one. Okay. So let's put this one. So the 4 hour, that's where we start reading from. So let's go back to 4 hour. Okay, reading. So all right, so look, this is the 4 hour, right? This candle was wicked. Look at it. Now the first candle that was weak was this one. The first weak candle that didn't buy was this one. Now see the reason why we didn't take a buy. So this was the candle that wicked it, right? This was the candle that wicked it. Okay, let's read from the swing eye what we've been doing. So we've been selling, right? Okay, we've been on the bearish order flow. Okay, let me just do from there. So bearish from here. So this is bearish, close below this candle. Sorry, close below this one. Yeah, I guess this one. Okay, yeah, it's this one. This one. This one. So you can see we close below. This is the candle again. Please close below. This is the candle. This one. All right. So we close below. Close below here, but let me explain why we didn't take a buy from here. Because we actually swept down this other candle with this one, right? Now, as soon as we swept this candle, we were supposed to wait for price supposed to sweep this low, right? Weak it, then close above it. But because price didn't weak it, all right, price didn't weak it. Let's check if there's a like SMT. If there's SMT there, then okay, you can see there's no SMT, right? There's no SMT. Let me show you clearly. This is it. There was no SMT. This is the same candle. There was no SMT, so that's why it failed. Had even there is SMT, it would have failed. Okay, so there was no SMT. But we closed above. So as soon as they see close above, they'll be like, oh, higher prices. Actually, it gave little reaction, but it's fake reaction. Okay, so price came back and stabbed into it and closed below it here. All right, so this was the low of the other candle. So this is it. So we stabbed it here, which makes us sweep the total candle, the low of the total candle. So that's it. And I'll keep explaining this thing for you guys until you get it right. So close below. What do you want to see? You want to see weak below, close above, but that didn't happen. So this actually weak it, but we didn't close above. All right, so it's still wrong. We are not yet in a bullish. Now weak below means this is the tortoise soup, right? This weekend below and this stock candle is a tortoise soup, but you can see it doesn't last long. It just went up a little. You have taken a trade from here. Maybe you go to like the 15 minutes and look for entry, take a trade, a 4 hour or 3 hour trade. But the main move has not started. All right, so this is it. This is like we, as you know, we are in the continuation trade from the monthly. We are using the weekly. So when price swept the close below the low, all right, at this point. So this is the candle that closed below the low. This candle, this black candle. So you can see we whipped this candle now, all right. And that was the time we got into the inversion, right? That was when we got into the inversion fair value gap, which is a key level for us. So we got into the inversion fair value gap, weak below. Then at this point, we closed above this point. Now, what do you wait for? You wait for price to drop down into that range. Now, this low is a protected low, is your stop loss, right? So price drop back into this low and then boom, rally to the upside. So what would have been your entry? How you would have taken this entry? So it's not hard. You just now you can see we wicked on GU2, so everything is just good, right? GU wicked, EU wicked. So let's check for DXY. If DXY wicked is good, if it doesn't, it's still good. Okay. Yeah, let's see on the top. Okay, yeah, you can see this is the candle. Here's why closed above it, which is like sweeping the liquidity above it, but it's just that it closed above it, so it's still the same thing. Okay, as long as you take out that high, it's still the same thing. Okay, so don't fall for the trick. Uh, so yes, so you can use DXY or the other correlating pair to take a sniper entry trade. Right? I don't want to go too deep into details. I don't want to really go too deep into details. Now, if you look at this is a buy candle, which is not another block. All right, there's no way you will have taken an entry from here as long as you're in the 4 hour. But because look at DXY tapped that same candle, this one, this particular candle, right, and tapped into this other block, right. So you will have, because of that, you will have decided to take a trade from this point, and your stop loss will be much more tighter around here, right? Before you start looking for trade from here, before you take a trade from here. So all those things are just the technicality and the logic around it. So if you are to check GU also, let's see if the same thing occurs there. Okay, look, okay, it doesn't. Look, this is sweep below, close above it. Okay, didn't come in. So still fine, it's fine, it's fine. All right, so you take a trade from this point. This is the point to take a trade from. Okay, This is like this is a key level, this is the other block, and this is another other block inside of it. This point, and these are rejections. Okay, so on the lower time frame, you see a trade and take it from this point and boom to the upside. Your stop loss below. Price didn't come back to the stop loss, and we rally back to the upside, right? So rallying back to the upside, close above this candle. This was the candle we closed above, right? So we wicked this candle here. We wicked this candle, so you can take a buy from there. Wicking that candle means full confirmation for a buy. Then we closed it, change of trend, right? Close above it. So from there, this is the next candle. Wicked it, close above it. All right, came down and start selling. Now we closed, wicked it. This was the candle we wicked it here, close above here. So this is the next candle, right? So you are looking for a sell, but we closed below this candle for a sell, but we didn't wick above it, right? Okay, yeah, we wicked above, close below. You see the sell was nice. All right, we became bearish a little from here, but since this is against higher time frame analysis and we're also coming from key level, this will surely fail. Okay, to surely fail. So it failed, and boom to the upside, to the upside. So something like this, it failed to the upside. So just take a buy from this point, the stop loss below, keep rallying to the upside, counter trend for a sell from here, then another rally to the upside, the same framework. Okay, you can see this was the key level, right? We close above at this point, which means we are still bearish, which entails a bearish candle. So bearish, uh, bullish, I mean bullish, right? So this candle got wick above and close below here. Then price come back into that point, that range, and around this point, take a trade, maybe this turtle soup, and you sell. You know, a long sell, another change of trend from here. We read the same price, this up down move is just the same price. You can see from that top, look at how long you hold your trade to this extent. Now at this point we changed, right? Because we got to another key level on the higher time frame, which was the breaker. So at this point, look at this, wicks, right? Close above, right? Now I expect price to come back into that point. We came back into the point and boom to the upside, right? Yeah. Then there was a range which confirmed it for a buy. You can see. So now this was the current move for the buys, because a lot of people were like, they were sad about the buy. It actually gave a good confirmation. Okay, it gave a good confirmation, but you guys didn't see it. I don't know why, but I saw it, but I didn't think it because I was on a buy on BTC. I always say, guys, that will be against my risk management. Now look, fundamentally, we close above here. This candle was closed above. This candle was closed above. This candle was closed above, right? So well, as soon as this candle close above, this particular candle close above, the next candle we rally a little deeper into this line, or a little into just any area around this candle. Just know we are looking for buys from here. No matter the consolidation, is a buy. Okay, because the weekly close above, even though we are in a key level, even though there's SMT. Okay.
Magic. Hey Krish, do you understand why, just 1 second, weekly highs, lows are important key level? Do you know that? Yeah, I share my screen. Do you see my screen? Yeah, just give me 1 second. This guy, this thing. In an weekly highs and lows are important key level. Do you see this? Yeah, okay, so do we like talk about every, like this is low and this is high, right? So we talk about a swing point, like this is one is important because it has it's a swing point. Like yes, like it must be just to make sure because I don't understand that and I feel stupid. What is happening now? Like this now is key level. Like if weekly daily high, this is key level. But if it is like what, just like this is not important. Yeah, okay. Because I want to understand like how to read price with candles. Because okay, take what? Yes. Oh, nice. Yes. Yes, but yes, but why below this? Because this candle changed the trend. Yes, 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 yeah, yeah. Uh, close above the bullish candle. Yes, yeah, yes, 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 yeah, yeah, yeah. Can you maybe on daily is more important because it is more dynamic. Breaker. Yeah, yeah, Yes, but in this case, Aone, I don't know if you know. You must know him, Aunicity, on X. Yes, but why? Yes, yes, yeah. Do you know how to identify correct ranges? Yes, yes, yeah, 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 yeah. But why is this the last candle? Which is our model one? Yes, this candle. Yes, and not the big one. Yes, 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 yes. Yes. Also, do you know Uzi turtle soup? Uzi tăsă. No, no, no. Do you know Uzi from X? Yeah. I got his mentorship, and OTE is not. 061, and this it is an order block tab. J, j, yeah, yeah, yeah. So yeah, I get it. Can you now tell me how I can read the daily chart? Yeah, 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 yes, 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 yeah, yes, yes. You mean with one candle? You mean a wick above close below with one candle or like a three candle model? Yeah, Yeah, yeah. Yes, 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 I get that. Okay. Yeah, yeah, that is nice. Thank you, man. Yes, but you mean protected, like you? Yes, yes. Okay, so how do you search for stop loss then? Yeah, for the stop loss. Yeah, yeah. Yes, 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 yeah, yes, 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 yeah, yes, bro, you're great. Thank you so much. Can you tell me what is your bearish candles cover and your background cover? Your chart covers. Yeah, on the background, canvas. Yeah, background. Yeah, yeah. And what is your bearish candle? What the fuck? Oh, opacity. Yeah, yeah, yeah. Yeah, thank you. So, okay, bro, thank you so much. I will try to find anything like that because I have to trade like that. I want to trade like Oni, bro, for real. Like he's amazing. Yeah, yeah. Okay, bro. I am from Bulgaria. Yes. Where are you from? Oh, yeah, yeah. I thought so, but yeah. So, okay, bro. Yeah, okay. Thank you, man. Bye bye. Do you have the video? Yeah, okay. Yeah, because I forgot to record the audio and my desktop is out. Okay, thank you. Yeah, okay, thank you. Bye bye.